Welcome to the January Luxury Market Report brought to you by MansionArizona.com. I'm your luxury real estate professional, Jeremy Poehls, and in this episode, we're going to take a look at the luxury real estate market in Phoenix, Arizona. The Phoenix single-family luxury market is still a seller's market, increasing by 7% to a 29% sales ratio. Homes sold for a median of 96.92% of the list price in December of 2022. The luxury benchmark price remains at $600,000. Total inventory was 694, a sharp decline of 140 from last month. And total sales were 201. The price band with the most sales was the $700,000 to $750,000 with 36 homes sold. The price band with the most inventory was the $650,000 to $700,000 with 97 homes available. The median sales price was $755,000, down from $769,000 last year, a 2% decrease. Total inventory is up 155% compared to last year. Total sales were down 49%, and the days on market were 59 days compared to 35 last December. With continued inventory tightening, it is likely that prices will remain stable. The Phoenix luxury housing market is flirting with inventory numbers that could cause prices to tick back up. If you want to see if this trend continues and to see the awesome luxury home tours we have lined up, make sure you subscribe to the channel and select that bell icon so you're notified when a new video is released. Now for some insights on the greater luxury market from our partners at the Institute for Luxury Home Marketing. A year in review, 2022. The best way to describe 2022 might be that it started with a boom and ended with a fizzle. Certainly, this is an apt description when looking at the declining sales each month over the last year. At the start of 2022, new inventory, especially for property types in high demand, flew off the shelf. But by the end of 2022, sales had all but stalled in comparison. Predictions versus reality. 2022 had been predicted to be a calmer year, with trusted trends such as the spring real estate market returning with increased inventory levels that would help plateau price increases. Demand was still predicted to be strong for the luxury properties, but with the frenzy of 2021 replaced with a more discerning consideration of property values. What had not been predicted was the influence of variables such as Ukraine, inflation, interest rates, and speculation about recession, which created a year of contradictions, uncertainty, and unexpected consequences. However, despite all these mitigating factors, the overall luxury real estate market remained resistant to any dramatic or negative change and still retains its safe investment appeal to the affluent. Even though there has been a continued slowdown in sales activity in the last quarter, prices have not only remained stable in most luxury markets, but at near record levels. Sales activity and price growth at the rate seen from March 2020 to March 2022 could not continue indefinitely. And although the slowdown may have felt dramatic compared to these last 2 years, the reality is that the market has returned to the more normalized pace of pre-pandemic days rather than there being significant correction. Inventory a major player in 2022. Inventory levels certainly controlled much of the buying narrative during 2022. The number of sales in the first quarter was only limited by the lack of new inventory entering the market, as the number of homes for sale hit a 20-year low. While there was a significant increase in the listing of properties in the market in the second quarter of 2022, this only served to bring the level back up to the point that gave buyers a little respite, the result of which was an increase in the number of sales. By the third quarter, interest rates hikes saw luxury sellers hesitate to put their homes on the market as they were unwilling to give up their low interest rates. According to Jim Egan, Morgan Stanley's U.S. housing strategist, over 90% of the market is fixed rate, for one. Most people have locked in their affordability. Inventory, especially new inventory, is critical in the luxury real estate market. The lack of it helped stabilize price and saw many markets remain more favorable to sellers. Consequently, by the end of 2022, the market had all stalled. Luxury sellers chose not to enter the market because they saw the rising inflation and interest rates were causing hesitation in buyers, and they feared they would not get the same price their neighbors had received in the previous year. Outside influences impact on luxury markets. 3 key influences played a significant role in the slowdown of sales. Interest rates. Luxury buyers for the most part are less affected by the rise in interest rates. However, The dramatic increase in 2022 saw that potential sellers chose not to list their homes, realizing that they would double their interest payments if they secured a mortgage on a new property. Stock market. Corrections in the stock market made luxury buyers more cautious, especially if they were looking to leverage their equity portfolio. The downturn saw corrections of more than 10% as the starting point that had many real estate investors hunker down and wait for stability to return. Inflation. Rising inflation and constant predictions of a recession also gave affluent sellers and buyers a reason to pause. With so much uncertainty and speculation, especially in the last 6 months of the year, as to the possible implications on the value of homes, those who did not need to sell didn't, and buyers hesitated to commit for fear of paying too much. Luxury properties retain their strong appeal. Despite the impacts of these outside influences, buyers are still eager to invest in luxury real estate, especially if they can negotiate more favorable terms. Properties are still selling if they are priced right or hold a special appeal to a current purchaser and, most importantly, are move-in ready, a demand that is still high on the requirements of most buyers. Cash buyers have returned during the last 6 months. Previously, even the ultra-wealthy were taking advantage of the historically low rates. In today's market, sellers are keen to work with cash buyers as a transaction is less risky as it does not rely on an institution to provide funds or change their mind on pre-approved funds. Leveraging their cash may be a short-term proposition for many affluent buyers who, with an eye on long-term investment potential of their luxury property, will at some time refinance, especially when interest rates and loan rates start to shift downward. Real estate is still considered to be one of the safest investments as historically capital values have appreciated year over year. And even though the rate of return may fall compared to the last 2 years, expectations are that home values will continue to climb. A buyer's market, but not quite. Buyers have been able to take advantage of the slower market, even though prices have not fallen to the levels that some had hoped. For the first time in 2 years, they have had more opportunities to buy a property without severe competition from multiple buyers and increasing prices leaving them out of the bidding game. While there are more opportunities for price negotiation, there are even greater possibilities to include more favorable terms, such as requesting longer closing times, closing costs, or completion of renovations within their offer, all of which were rarely seen during the last few years as fierce competition drove sales. Taking a longer-term view. Ultimately, the major lesson from 2022 has been that market corrections can shift fast. So taking a long-term view on investing in real estate, especially luxury properties, is an important consideration. Equally, we have seen a swing in the appreciation of property from being another investment asset to one of major importance in people's lives. The affluent are willing to pay for a luxury property that provides for their security, safety, and overall well-being. Properties, whether primary, secondary, or investment, are being purchased by the affluent with future requirements in mind. And if a property meets their criteria, whether interest rates are high or not, this will often have little impact on their decision. Future expectations. As we head into a new year, we expect the luxury real estate market to remain softer than last year. But it is important to remember that we are simply returning to a more normalized market. Expect properties to stay on the market longer, prices not to drop significantly, and the affluent to make decisions based on long-term investment. If you're looking to buy or sell luxury real estate, it's important to approach the market with a critical and analytical mindset. By understanding the current market realities and setting realistic expectations, we can ensure that you reach your goals. At Mansion Arizona, we're here to help you navigate the luxury real estate market in Arizona. We offer free consultations to help you explore your options and determine the best course of action for you. Plus, if you have any questions about living the luxury lifestyle in Arizona, we're more than happy to provide you with all the information you need. Contact us today to get started.